Well, Mark, thank you so much for coming. Mark Elenowitz, the CEO of Tripoint Global Equities.
Thank you for having me.
Did I give the introduction correct this time? Mark, the markets are muted. And they are giving reactions, unfortunately, more towards what happened between Russia and Turkey than GDP and all the economic data in the US. But let's talk about the economic data, shall we? Is this a really good number because it came better than expected?
Yeah, I think it's better than expected, but it's if you look at the news over the last couple of days, it's really right in line with what everybody thought at 2.1%. It was moved up. 2.1% is realistic, but what we're looking at here is it's really a function of inventories are up. We're seeing an imbalance in foreign trade. We're seeing now more with the dollar being stronger. We're not seeing as much global demand. So I think it's more of a number here that I think we're going to have to look at the fourth quarter, and we're going to look for some anomalies that are going to come up due to holiday spending and some other things that we're going to come into the place to look at that full number.
So I kind of sense that you're not that optimistic about the U.S. economy. What is your fourth quarter estimate, and why do you think that way?
I don't think the economy is really growing as robust as everybody thinks. We're seeing better things happen. We're seeing more jobs. We're seeing the job numbers. The non-farm payroll was up to 271,000. If you look at it, unemployment is at 5%. It's a 7.5-year number that we're now looking, that the Fed really looks at that rather than personal spending. And if you think about it and you look forward, and everybody's so focused on what consumer confidence is, how we're going to see people come back into retail shopping. But all of that, I think, is somewhat of an illusion, because we're looking at a fourth quarter number here where if you really take a hard look at it, you're seeing that retailers are discounting prices. Everybody's looking for something on sale. Everybody's looking for bargains. So you're seeing the shopping season start a little bit earlier. You're seeing the shopping season go a little bit longer. So is it really, what's the net effect on corporate profits? Is it an illusion because margins are down and sales are up? So really, we have to look at what the fourth quarter is going to look like. And then also we have a global market that's in turmoil, especially with what happened here today.
Well, if you think it is an illusion, Mark, then do you think that maybe Fed might not increase the interest rates in December because they might maybe not tell us, but they might think that the U.S. economy is not that strong, even though they've been giving us the message that we should get away from the zero interest rates and the economy can stand an increase?
Well, I think
agree.
I think we definitely can stand the increase. I mean, really the uncertainty of the gyrations in the market is just this indecision. They constantly are moving the goalpost. A quarter point rate hike, it's not a big deal. It's something that we get it over with. The markets are going to adjust down, but then the U.S. economy is strong in the sense of continuing to grow. We're going to weather that storm. Stock prices will continue to rise up, and then we're going to be putting ourselves in a position where we're setting a policy that everyone's comfortable with. The problem is if the Fed delays too long, then they're going to have to rush and they're going to have to raise interest rates too fast. So what we need to see is slow increases. Look how the numbers come out in the fourth quarter. Look for the FOMC meeting to see a quarter point rate increase. And then we'll look at it in the first quarter. We'll probably see another rate increase in the second quarter, 2016. At least that's what I feel.
I understand, and it's well put. However, like Danielle Tarullo said yesterday, even though we might be close to unemployment, and I want to ask your opinion about it.
Right.
Unemployment rate, non-farm payroll, we might be close there, but we're not anywhere near close to the inflation target, 2%, he said. And I know that from talking with you, you don't even believe that we are strong in terms of the labor market.
Right.
Where should we be so that we are really close to Fed's targets in terms of A, inflation, B, labor market?
Well, I think the inflation, obviously, we're not even close. We're at 1.3 or give or take, or not even close to the Fed benchmark of 2%. I think we need to see, I think that we do need to be in a wait and see situation, because if we do increase rates too fast, then inflation will get away. We need to evaluate where the marketplace goes and then figure out. I think when we're going to see an increase in jobs, I think we're going to see once the new numbers come out in next week, I believe, on the 4th.
Yes, on Friday.
I think that's going to be positive. I think it's going to continue to show. But if you really look at it, I think it's still skewed because we're not seeing a lot of business spending. We're seeing cutbacks on oil, in other types of construction. We are seeing housing increasing. in housing starts. It was off from September to October, but it's still much above where it was in 2014. So if you think about it, then you've got new housing starts, you've got new people that are buying homes, you still have rates that are low, so people are going to be buying furniture, they're going to be buying garden supplies, they're going to be buying, and basically we're going to see more and more go back into the economy, and that's going to continue to fuel growth. But we also have to look at where we are in the international market, and I don't really want to give too much attention to terrorism or what's happening on that area, but if you look at it and you see what's happening in other parts of the world, people are still in a state of panic. You're still seeing people that are not riding subways, that they're not going out into public. And that's going to have an effect back on us. And then what's going on in China with the slowdown. And if you think about it from the standpoint of the dollar strong, so if you look at it, exports are going down. And with China not being able to, with their economy slowing down, and with everything that comes from that in terms of other suppliers that they're creating value for, all that comes back to the U.S. So it's kind of this cycle that never really seems to end. But the one good thing that we can say is the U.S. market is growing. It's just not growing as fast as everybody wants it to.
Is the job market growing as fast as we want it to?
I don't think it is. I still think we're seeing, large corporations are starting to hire again. But if you really look at it from a lending perspective, small business is not getting capital. The banks are flush with cash, but they're not putting cash out. So the small business owners, entrepreneurs are not being able to hire like they want to. And that's really what we need to fuel. So I think everybody's so focused right now on what the Fed's doing, but you got to look beyond the Fed. You got to look at, and Yellen said it, and her predecessor said it, you got to look at Washington. You got to look at the lawmakers and inspire change to be able to create value and to be able to create opportunities for these small businesses, which then in turn will create additional hiring.
Thank you so much for your input. Well, that last sentence made it all, and it summarized it. My producer says our time is up, but we have to have you back again.
I appreciate
and
you
we'll
having me.
Talk about it. Yes, thank you. Thank you
very
again.
much.